Hey there, traders. Welcome back for today's recap. It's Tuesday, August 12th, and the Bulls finally did it. They pushed into new highs and, just as importantly, closed above that 640 mark that we've been talking about for days now. That's a big psychological level, and it begs the question, where is the destination now? So is this the start of a full-blown breakout, or is it just the Bulls making a statement before the next round of selling? We'll circle back to this daily chart later to dig into the possibilities. This morning's daily levels and game plan went out at about 8:44 a.m. Eastern. Our access level for the day was 637.48. Friday's close had been below that number, so we were watching to see if the Bulls could reclaim it. We said that getting above 637.48 would open the door to test the highs around 639, and if they could start printing 10 or 15-minute candle closes above 639, the former all-time highs would be in sight. We also covered the bear case, the possibility that they might make a stand near the highs and push price back down, and that will be in line with that bearish consolidation pattern that we've been tracking. But the real wild card was before the open at 8:30 a.m. We had a CPI data release that jolted the market, and it kind of spiked SPY up toward that 639. So that kind of pre-market move tends to set the tone, and with more data releases scheduled later this week, there's a good chance volatility could pick up. So this is what we had to work with going into the day this morning. All right, let's look at the whole day's action. So off the open, price was already buzzing from that CPI move. So after letting the 15-minute window play out, and right after it closed, they were below 638.86 and coming back up into it here. So that's where the rules said to go short. And if you did, you didn't have to wait very long. Price rolled over, reacted off that level pretty quickly, pulled down. There's your first 4-point base hit, just a few minutes. That's how I got my one trade for the day. We'll look at that recording of it shortly. From there, the bears pulled down into the axis level, 637.48. That was the second official base hit, this time on the long side. So you can feel some tension here. They tagged the level. They kind of stalled, bounced around a little bit. Then the bulls stepped back in. Once they got above this axis level, that kind of gave us an idea that the bulls were probably not finished. It was a clue. The more closes the bulls could get above this axis level, the more strength they were likely to get for trying to get above 640 eventually. So this 638 had been shorted once. We're not going to short it again, although they did react the second time. Just playing by the rules. So they got above this level, but not enough time had gone by, although they did react. But we're not going to count this per the rules. I like to see 20 minutes go by when price gets above a level and you want to trade it on the other side. But they got up to 640.23. They hit that level to the penny. Another classic trade with the 5-cent buffer or not. You still would have had an easy base hit at 640.23. So once they got above this level and they came back down into it, this was prime time to go long. Enough time had gone by. You needed the 5-cent buffer here. You see the low was 640.27. So adding that 5-cent buffer means you got pulled in precisely, spiked it by a penny, and then took off. So we talked about in the game plan this morning about not having any levels above 640.23 up until 642.30. So you could have used this 642.30 as a target if you had got long here and just rode it all the way up, maybe pulled 20 points or so. Not saying you're going to do this. We're going to treat it as a process. So there's just another 4-point base hit at 640.23. So they got up to 642.30, and with your 5-cent buffer, you would have gone short at 642.25. So going short at 642.25, you're looking for a 4-point base hit in the E-minis. That's the equivalent of around 641.85 in the SPY. They never got down close enough to what we would call a near miss of the profit objective. They kind of just hung out underneath 642.25 without really giving you a full 4 points. You could have jumped out at any point, but my rule is if you're still in an active trade and it gets close to the closing bell, I would jump out at the market around 10 minutes or so before the closing bell. So closing out at the market somewhere in the neighborhood of 3:50 p.m. Eastern would have put you slightly out of the money by a few points. Officially, the close of this candle was 642.34. A couple points, we'll call it, if you had not already jumped out at a wash or took a couple points profit as they tried to get under this level and go lower, but they didn't. You would have lost a couple points on this last trade, but no big deal because the previous 4 trades would have given you 4 base hits pretty easily. So here is the recording of the trade that I took today. It's pretty quick and painless. I took the short at 638.86 when they were underneath it. That was by the rules. Went short with 4 contracts right after that 15-minute window opened, and the market did exactly what I expected it to. This is not sped up that fast because the trade happens pretty quickly, so we'll move ahead here. They get under the level, back up. I'm going to go short. There we go. And I pulled 7.5 points. on 4 contracts, all within a minute or a couple minutes or so. And that was pretty much it. One and done. It was enough for me, or at least good enough for me to call it for the day. One good trade, one win early in the morning. No reason not to give anything back or risk anything. So that gave me plenty of time for the rest of the day to focus on other things. So I'll scrub ahead here. I let it go for the rest of the day, but there's really nothing to look at until, well, at all, until 4 o'clock. And I might just go ahead and trim these things until about noon, especially when I have trades like that in the morning. But that was my one trade in the morning. The PBR log, there's a lot of green on the screen for August so far. 4 base hits, 16 points for today. That's a textbook day. And the rate of return is looking pretty good at this point in the year. Then over on the Sam's Trades log, $1,500 on 4 contracts. That's what you get with 7.5 points in the E-minis. One and done. Nice morning trade. So these numbers keep adding up, and days like this are a great reminder that you don't have to overtrade to get results. Back to the daily chart. So now that they've closed above 640, what is the bull target from here? Today's close was strong. There was no fading into the bell, no sign of exhaustion yet, at least. If they keep it up and we see another daily close or two above 640, that's probably the market's way of telling us that the bulls aren't done. But if this turns into a fake out and we slip back below 640, like tomorrow or later this week, it doesn't automatically put that bearish consolidation back in play, but it would be a signal that maybe the bulls have done all they can do for now. If they're not finished, the next number I have is 645.65, somewhere in that neighborhood. Let's move this down so you can see 645.65. And of course, above that, not too far away, is the big psychological round number of 650. SPY 650, that could be an obvious target. We'll just take each day at a time. And as you know, especially if you're a subscriber to the daily levels, you'll have solid levels to trade against each and every morning. It takes the guesswork out of figuring out where the good trades are. So they are in uncharted territory once again, all-time highs. And as I said, we'll take each day at a time. So that's a wrap for today's recap. Thank you for watching. I appreciate everyone who is following this channel and benefiting from these market and trade recaps. I hope you are making money. We'll be back tomorrow and do it all over again. Talk to you then. Have a great rest of your day.